Good afternoon and welcome to our budget speech special. I'm David Williams, and joining me at the desk here at CNBC Africa for Budget 2016 are Brigid Taylor, who is CEO of Kaon Capital, Charles Makola, Director for International Tax at EY Africa, Professor Jannie Rossouw, Head of the Wits School of Economic and Business Sciences, and Xanti, Payi, an economist at Nascence Research Insights. And we expect to be joining us from Cape Town, Lesiba Mothata, Chief Economist at Investment Solutions. Well, let's just get a big picture response here. It's been a much awaited budget, Brigid, and some have said it's the most important since 1994, maybe the most important ever, given where the country is and the predicament we're in. Overall impression of how he performed?
So for me, it was a good budget. He said the right things. I think it was a very tough one because we're in an election year. Protecting the personal income, so doing the right thing from that perspective. But I think that what he really is saying, we have to pull in the purse strings, and the rolling out of that is what's going to be imperative. So I think the overall message was great, said the right type of things for rating agencies particularly, but there is going to be questions about getting the rollout right.
Absolutely, and I agree as well. I think, look, if you're coming from a stagnant position, you know, in the midst of these economic headwinds, every step forward that you take is progress. You know, 2 steps forward is probably success, and I think he touched on the right note. He made a couple of steps forward. As to whether he covered all the expectations before budget, I'm not sure about that, but he did touch on most of the core notes that were required to be touched on.
Yeah, indeed, David. As Joel said, the minister touched on important aspects. I would have wanted to hear more about specific savings. I would have wanted a specific, like, we will not buy a presidential plane. We're not going to blow 4 billion rands of taxpayers' money on that. I would have wanted more specifics on savings. I must admit that I've also expected more tax increases. So,
yes.
In my view, I would have thought, given the situation we are in, more tax increases. So the test now really will be whether the government can actually make this set of numbers work. Is this a credible budget?
Yeah.
It's the first time in 20 years that I have doubts in my mind.
Look, I mean, I think I agree with everybody. I think, you know, this man is a professional. He knows exactly what he's doing and he can talk the language. Repeating many of the things he said when he was first appointed, you know, in terms of confidence, we need to do the right things and all of that. So he did all the right things. And I think, you know, part of the whole thing also what he was talking about is around implementation. I think also we can go only so far to try and give us exactly what we want. It's very, very difficult. But I think, you know, in terms of what the things that he needed to say for investors to hear, to be comfortably said. And I think maybe one of the 2 things that were a bit of a surprise for me is things that he's probably going to try and hide over time, which is trying to think about this idea of you know, education and regulation and make sure that those things change. I don't know how he does that, but certainly, you know, when he talks about regulations and making sure that investors are happy, which is the language we haven't heard in a long time, but it's quite important to actually hear those things.
Well, let's go now to Cape Town. Our 5th guest is Lesiba Mothata, who is Chief Economist at Investment Solutions from Cape Town. If the ANC has its way, or looks like its way, maybe you won't be reporting from Cape Town for too long on the next budget, Lesiba. But overall, your impression of Minister Gordhan's budget?
Yeah, it was a well-considered budget. They looked at the interesting aspects in terms of tax. So it was interesting that there was a line there that said, South Africa is in a dire strait and we need action. And that action was really to hike taxes. It was interesting that they looked at capital gains tax. They're introducing new taxes, which actually suggests that you know, it improves the coffers for now, but the jury is still out on whether we'll be able to structurally grow this economy.
Right, I want to pick up Jannie's point first for part of our discussion. My sense is that the market, people generally, markets in the financial sense, but also the stakeholders, the people, I would have liked to see a bit more detail on, there's talk of exploring with the minister the possibility of SA Express and SAA coming together. Surely we wanted something more specific in this budget. That's one example. Another on the cuts. New guidelines to limit the value of vehicle purchases for political office bearers. We've heard that before. Yeah. Is this new? Has there been enough concrete things in this budget to fill us with confidence?
In short, on those points you've mentioned, I would have wanted to hear government is going to give SAA away. It is unsalvageable in its current format. Just give it away. Taxpayers can no longer afford SAA.
But that's the level of disclosure we wanted.
Yes. In terms of the cars of political office bearers, I wanted to hear the minister saying political office bearers will only buy vehicles manufactured in South Africa. These ministers can be very comfortable in the likes of a C-Class Mercedes or a 3 Series BMW. They can still scare all of us on the motorways. So I would have wanted more detail so that we had something to say, yes, this is serious, and something that we can measure against. To say vehicles, it's not measurable. I wanted measurable ideas that we can see over time, is this happening or not?
Brigid?
Look, I think from my perspective, I think he did. There's a couple of issues. If we look at the bigger picture, we're looking at where the main spending's going. So we're looking at social grants, which are being increased quite significantly. We're looking at the education. We're looking at transportation. That's an interesting one, and that is good in terms of social infrastructure. But as you mentioned, the biggest issues, and I think where the contagion lies, is government's staff bill, the bill around government spendings, particular to their staff and their social infrastructure, and the resources that are being spent, and how much accountability is there for that. So one of the good things that I picked up that was mentioned was more procurement or more management around overlapping state-owned entities, overlapping portfolios, managing that in a better way. That type of procurement speaks a good tune. But how are they going to do that? And what will those accountability measures look like?
Also,
because if there isn't clear lines in the sand, we don't know how to play the game.
And you're not clear what savings will be made by this. So yes, we want it to be more efficient, but it's not big hit savings on expenditure. Charles?
Yeah. David, with your permission, I actually want to talk about the taxes a little bit.
Let's go on to the taxes.
Under the taxes, yes. It was quite interesting for me. Firstly, there was an expectation of VAT increase, I think across the board from business, etc. He didn't do that, but he did mention that the possibility of VAT increase is possible in the future. I think they're trading carefully. Obviously, there's various dynamics that comes into play. The other interesting thing is, you see our tax mix, corporate income tax, personal income taxes, and VAT and other. There is that little block which is about 19% or so of our tax mix. He focused more on that and partly as well on the fiscal drag as some form of source of revenue for the fiscal. So that was quite very, very interesting. Something definitely unexpected. The fiscal drag probably, yes, but the lack of increases and the focus mainly on the other bracket of the tax mix is probably something that caught my attention. Very interesting.
I mean, I think the tax thing was quite interesting. As I say, this man is a pro, right? In his taxes, he talked about health and environment, right? Alcohol was a thing, that the environment, taxes, making sure that, you know, pollution and all these things. And so you're getting a sense that he's using the taxes quite well. Then he went into wealth taxes. People wanted to hear something about the wealth taxes. Are we distributing, you know, the rich are paying more? So he went into that, and he's protecting, you know, the less wealthy. So these are quite important things. But also, I think for me, I'm really, really impressed, and I hope this actually does work in his favor when he talks about mining regulations and making sure that they relax this in a way that actually makes sure that people are interested in investing in mining, because that has been quite a big thing. And one of the things also he continues to say is around how you actually make sure that policy works in a way that is credible, but also does not make people uncertain. So these things you are saying are very important, but I don't know if it is within his own capacity to continue to push in that way. So he can say them, but I don't know if it's in his own capacity.
Well, again, isn't it that we would have liked him to go a bit further?
Yeah.
I mean, in some respects, he's got detail. He's got a sugar tax, which we'll come on to in a moment. But he said there will be a sugar tax. There's been a 30 cents that's very specific on the fuel levy. Why couldn't he have told us about some detailed measures to make it easier to do business? And again, you need one or two, maybe symbolic, but also concrete things that make people say, wow, if they're going to do that, then things are going to be different. As opposed to, well, it sounds good, but we need to see the detail.
It's probably not even in his ambit, right? I mean, regulation of the mining sector is probably outside of his own control. So he probably can't say that, except because people are watching and this is an opportunity for these things to be said. He can actually say them. So I suppose that's the one bit of it. But also, we'd be here the whole afternoon. I mean, this was a very long speech. So to get all the detail we wanted, we did pretty much.
He did mention that there were 80 bills that are currently being pushed through Parliament. He talked about some of the specifics, like the issues around immigration, the issues about youngsters coming into South Africa, etc. He talked about certain things that were specific and that are topical right now. I mean, as you mentioned, there's too many to go into. But I think that some of the key things that they talked about were mandatory procurement processes that will be put in place for government spending around infrastructure. Fabulous move, because we need to know that our money is going to be spent correctly, that we will get the productivity and we will get the return. So those types of things, for me as a South African and speaking to foreign investors, we need to know that that money is not just not doing anything. One of the interesting things I'd like to see as a mom person is if we're spending 260 billion on education, we really need to see a change. You know, it's one thing to be picking up a bill of 16 billion on the universities, but getting our kids through school is the big challenge.
Absolutely.
And that's, you know, those types of things are really where they can in this election year really make a difference.
Lesiba, let's come back to you in Cape Town.
Yes. How's it, Dave?
Yeah, you had a point?
Yeah, I'm just saying that, you know, it's all well and good to look at the, you know, the numbers, the machinations, you know, going up and down here on taxes, etc. The only one thing I want to say is that we're actually at the crossroads. This, I don't think it's enough to change the outcome of the country going forward from what investors will be looking at. He had confirmed that foreign participation in the bond markets of foreigners has gone down. We're now at 32%, having peaked at 36%. In other words, the outcomes of December resonates, still lingers, and the jury's still out.
Well, let's come back to Brigid on that. Part of your job is to worry about what investors are thinking. The investors who've been watching, what are they going to do as a result of this budget? I mean, they haven't taken account of some of the detail we've talked here. They've listened to the budget and maybe they've made up their minds. Big picture now. What's going to happen?
Big picture is really around, are we going to turn the corner in terms of our growth projections? So growth projections globally have gone down. In South Africa, however, they've done the same. And the concern is, how are we going to get this horse back on the road? You know, and we've spoken about it at nauseum in terms of killing the goose that lays the golden egg. We've really got to look after the fact that we do happen to have 40% of our bond market is owned by foreigners. It's, as Lesiba said earlier, we're right back down to sort of 32% levels. Now, that's a lot of money that moves out of the country as a result of perceived mismanagement or perceived conditions that are not conducive to growth. So some of the things that they spoke about, and coming back to the comments made earlier, is we needed those concrete evidence points. However, I think that for now this will placate the ratings agencies because the right language is spoken. But the reality of it is that certain things, so these bills, these 80 bills that are being spoken about, we need, all of us as citizens need to call government to check to say, when are these going to be implemented? Because business needs to happen more productively. It needs to be easier to access. It needs to be more facilitative. I need to know where I stand as a foreign investor and as a local investor. Those type of mechanisms need to be spoken about and made public so that all of us know where we stand in terms of attracting and continuing to attract that foreign flow.
You know, David, one thing that's actually quite critical at both the points that Lesiba is mentioning and Brigid is that if you look at the financing, it goes down from 10% in terms of the foreigners to 2%. So he's quite cognizant of the fact that he's going to struggle to get this money. So he needs to, you know, and he's put it out there that he expects to only get, I mean, about only about a tenth of them. So it's not a lot of money, but he can tell that things are very difficult and he's lost a lot of confidence.
But one of the things he did mention, which was interesting, is that there's a shortfall on the budget, and the only way to do that is to issue bonds into the market. To do that, you have to have appetite. And, you know, that's the point. That's the conundrum.
Lesiba in Cape Town?
Yeah, for me, the other thing that I think is really critical is that while the minister is talking about debt sustainability, the matrices have actually deteriorated. It was expected on net basis debt to stabilize around 44% of GDP. It's now going to be at 46% of GDP because the denominator, nominal GDP, is deteriorating. So these are the measures that credit rating agencies are looking, and also you'll find that the servicing of this debt, the costs related to interest, is the fastest growing component of expenditure. In fact, for every R1 earned, 12 cents goes to paying interest on debt. That really is a concern. I think rating agencies will look at that in a unfavorable light.
Well, let's get the views of the panel, some closer than others to the rating agencies, but are they going to be, as you said, placated by this? Are they going to keep our investment rating? Let's just move along the table, Charles.
I think in terms of the investment rating, I mean, what were the investment, your Standard & Poor's, etc., wanting to see? I think what they wanted to see is a couple of things, and the core ones is that you're putting in place measures that will encourage growth. I think the fundamental thing has been growth. Has there been a pronouncement? I think we need to get into a bit of more details into the budget speech to find those details. Perhaps they are hidden in some of the annexures, but in the speech themselves, I don't think there was probably enough of those incentives. The second one is obviously your debt to GDP ratio, and I agree with him. Can you manage that efficiently? And do you have a pool of revenue that you can tap into? I mean, the forecast that on the revenue side, the forecast that he pronounces you 11 billion below projections. And if you look at the measures that he's putting in place to get additional revenue, I'm not sure if those are really big sustainable measures that anyone can put in place. For instance, I mean, an announcement around avoidance, I'm not sure if that's an over-exaggeration or not. If you look at items that they will be focusing on, there is an argument that there's a lot of diminishing returns at play in that space, that because of SARS high competent capacity, you have exhausted almost most of the avoidance, tax avoidance that's taking place out there. So aggressive enforcement, does it still get you there? Probably, maybe it will get you. It's hard to quantify.
But you're saying there's not much room left there. There's not much more fruit to pick.
It's not quite big. Interesting one though. Because this projections going way above the 50 billion of foreign assets or held by South African individuals or companies, etc., that are undeclared. He's announcing a voluntary disclosure program. Now, this has been done in the early 2000s. It's
an amnesty.
It's an amnesty. But, and then following that, there was a permanent voluntary disclosure amnesty program for tax purposes that was put in place. What made it quite tricky and not quite working was the interest was punitive. Because interest, I think the argument was interest is time value of money. Really, you have to pay us interest for all the time that they have been non-compliant. And perhaps some of the individuals didn't come forward, and the hope is that they will be able to raise some portion of the revenue.
This was one of the things that such people would have been looking for.
Absolutely.
And we haven't seen that.
We don't see that, absolutely.
Jannie, just coming back to the ratings agencies. And
on Charles's point, perhaps I should just make a public declaration. I was the chief operations officer of that amnesty system, and I should stress that it was aimed only at individuals. So the minister's aim might now be companies, etc., which will broaden the net. Okay. But Charles is quite right. I think the minister is optimistic in that respect.
Absolutely.
The rating agencies, they will be in a holding pattern. They will not jump up and down and say things suddenly look better. I've just looked at the Treasury's growth projections for this year. They expect 0.9%. For next year, miraculously 1.7%. Without a clear plan how to ratchet from 0.9 this year to 1.7 next year, and then 2.4% in 2018. I would love to see that type of growth, but I don't see the plan to get us there.
But what this is just a continuation of the normal projections.
Yes.
Next year is always better than this year, yes, regardless of what's going on, even if things are getting worse.
The other thing, talking of projections, and certainly the rating agencies will look at this, is the Treasury, the minister in the Treasury documents, the Treasury is much more optimistic about inflation projections than the South African Reserve Bank. For 2017, the Reserve Bank in its latest policy statement projected inflation at 7% for 2017. Treasury is working on 6.3%. There's just no explanation for this. So ratings agencies will start picking up on these things. And the other big thing that rating agencies will look at is this initiative to contain the public sector, the size of the civil service. We already spent 45% of government revenue on civil service revenue. That's where we need to see the big changes.
And you yourself have talked about our particular fiscal cliff. If government spending does not decrease, you would say that the entire national budget, I think it was by 2026, would be spent on salaries.
Salaries and social grants.
If this was not arrested in some way.
Yes.
10 years' time entire. Quick one from Lesiba, one more from Joburg, and then we have a quick break. Lesiba?
Yeah, just on growth, where we are now, monetary policy is tightening. and fiscal policy is tightening. There is no growth that has been placed from both ends of policy. We're heading for a recession.
Well, that's a final point for us to pick on. Yeah. Has the minister been, as they usually are, too optimistic here about what's happening in the future? And is he not being brutally honest and saying, guys, it's going to get tougher, not better?
Look, I absolutely agree with Lesiba on this point, because that's exactly what my feeling for a while, that you can't have both fiscal and monetary policy going the same direction, and you are trying to pretend as if you are looking for growth. It's just not the kind of thing that tends to happen.
Well, we are talking about the budget. We have 4 guests in Johannesburg, 1 in Cape Town. Rashad Tayob from ABAX Investments joins us now to discuss how the bond market reacted to Finance Minister Pravin Gordhan's speech. Good afternoon to you, Rashad. We've been talking about this, and in the end, I suppose the market will tell us what the market's response is. What have you seen?
Yes, good afternoon. The market reaction has been quite negative. So subsequent to the budget, bonds sold off around 20 basis points from around 9.13 on 186s all the way to 9.33. So quite a negative initial reaction. And I think that given the buying we've seen in the last few days, it seems evident that investors had become extremely optimistic and were expecting something dramatic from the budget. And maybe something more on the revenue side, so a bit more in terms of tax increases. But this was a kind of business as normal budget with a few extra things. And I think investors were left a bit disappointed.
From your experience of these things, do we have a counter reaction a few hours later? This is the virtual immediate reaction that you're talking about. Or is this it? Has the market spoken?
Yeah, I mean, there are some positives from the budget. I don't agree that revenue should have been increased dramatically. I don't think tax increases are absolutely necessary at this point, especially if they're going to diminish growth, and that would be a negative. I also think that the deficits have been pulled in, so to a reasonable extent. The problem is the expenditure cuts that they are talking about are still a bit too vague for everyone's liking. So we've seen a lot of vagueness in terms of expenditure over the last 3 or 4 years, and I think the bond market is getting a bit uncomfortable with that, and we saw that again today. So it's really left on, in terms of delivery. But in terms of valuations, we're still seeing yields at very cheap levels. So our bond yields are quite elevated in an environment where global yields have fallen quite dramatically in the last month. And at these levels, I think it offers quite a bit of value. And once this, once people have digested the budget, I think they're going to look at some of the good signs in terms of the SOEs, the consolidation of SAA and bringing in minority investors. In terms of municipalities, there were a few good signs to be taken from that. And I think once that happens, we could see some consolidation and maybe the buyers return.
Well, perhaps your key phrase there is once that happens, and the comment we made earlier is that there's too many things that are going to happen here or are going to be explored and haven't actually happened. Brigid Taylor is with me, Rashad. She's got a question for you.
Hi, Rashad. Just a quick one. With regards to the market's reaction right now, I think, you maybe give me a clearer understanding of your feeling right now in the market, because I'm sitting here, is just with regards to how much of that price move that we saw towards the close of yesterday was just as a function of the market pricing in a lot of good news, pricing in all the good news around this budget statement. And this is just reality kind of setting in, not necessarily showing that it's a bad budget, more that it's just a lot of good news was priced in. It maybe wasn't as descriptive as we wanted, and markets trying to find a level mean post the budget statement actually coming out.
Yeah, I think that's exactly it. We've seen a lot of buying in the last few days. The bond auction yesterday, which is there's a bond auction every Tuesday. The one we saw yesterday was massively oversubscribed. It was the strongest auction in years, where you had oversubscription of 6-7 times on a number of bonds, which means that people were definitely chasing bonds in the last few days because they expected a huge amount of positive, and maybe they chased them too low. So we've had a strong rally in January, a big recovery from the December sell-off, and that maybe it had run too far too quickly, and it could be that this is not a true reflection that people are upset with the budget, but just it didn't quite do enough, to warrant a further rally from these levels.
Well, that is Rashad Tayob from ABAX Investments talking about how the bond market reacted to the speech. I think that reaction doesn't come as a surprise to this panel. That was roughly what we said at the beginning. Sounds good, but not enough detail. I want to put it to you that if you just look big picture, and boy, this is a little picture. The speech that he made took nearly an hour and a half. But when you look at all the details on the Treasury website, it would take hundreds of hours to read it all out. So we really are still peaking big picture. But based on that, we've got, my sense is that the tax issues are not going to, it's not so much a tax increase, it's a costs decrease that he's looking at. Is that right? That balance, Jannie?
Yeah, indeed. The Minister is trying to achieve his objectives through spending cuts.
Lesiba, your view on that? If you're looking at the balance between revenue raising and cuts in expenditure, we didn't know what the balance would be. Certainly the tax increases, the revenue increases don't look that dramatic.
Yeah, they're not. And I think it was interesting what Rashad said, that with the bond markets still cheap, as he had said, despite these reductions or consolidation on the expenditure side and increased revenues, the bond yields are still elevated in an environment where global yields are falling. There is machinations about negative rates out of the US. Japan has introduced negative rates. There's a bond market rally, and I'm not seeing it come through to our own outcomes. The financial sector, the financials on the JSE also are down. It's all very ominous to my taking, because investors may be looking for that implementation, especially on the cost side, that it will come down as planned. And if it doesn't arrive, sure, we may be back at square one all over again.
Yeah. Let's pick up on that discussion.
Yeah. So look, there are certain dangers of slippages, right? I mean, one of the things he talks about is that he's going to keep salaries at about 6.7% increases this year. Now it's an election year. It's going to be quite important that they actually keep serving the unions in some sense. So 6.7% at an inflation rate that's going up now at about 6.2%, probably to reach 7%, whatever that might be. So there's going to be a lot of pressure in that. And then saying he's only going to increase spending by 5.7%. There's a very high likelihood that he slips, given all of the dynamics, and then obviously looking at the revenue that he might not be able to raise. I mean, capital gains tax is slippery in the sense that you actually depend on people not actually to have increases in their, in their assets, but to actually dispose. And so if they're not disposing, nothing's going to happen, and they find.
So you have no control over it.
Yeah, absolutely. So there's no control in one of his bigger items, and transfer duty. So the other places you might have some control, because you can always hope for growth, and they have no choice but to actually pay that money. Here, he's got slightly bigger problems.
Yeah, I think there's a consensus emerging here. Charles, that's what you do every day is the tax. No. And if we look at the speech summary, he says our tax proposals include the following. Personal tax relief. Now, the people looking for revenue relief, okay, so that means less tax. Increase in monthly medical tax. Oh, so less tax there as well. That's good for us. I'm not complaining.
For us, not for the government.
Increase of 30 cents a litre in the general fuel levy. That could have been in any budget.
Absolutely.
To find a bit of money. A tyre levy. Okay. Not everyone's buying tyres all the time. Every 2, 3, 4 years maybe.
Yeah.
A tax on sugar-sweetened beverages. Well, maybe that could have come in any budget. It sounded, as Rashad said, a business-as-usual tax budget. And that wasn't what people were expecting.
Absolutely. And the question that comes is it a missed opportunity? Given even the support.
On the principle of don't waste a crisis.
Exactly.
People were expecting to be hit hard.
You see, people expected increases. Business supported increases, particularly on the VAT side. So could it be, I mean, I guess we'll judge it as time goes by to see what the impact of that will be, in the short term. So
but plus, we're one of the lowest VAT distributors VAT charge countries in the world, I think. So you've got room to move.
Absolutely. By comparison, I mean, even a percentage increase, projections are you'll get 15 to 20 billion rand, and VAT is a more immediate tax. The cost cost of enforcement are less, and you're getting the money now. If you look at enforcement, aggressive enforcement means you're going to litigate. On average, it takes you about 5 to 10 years to actually finalize a case on litigation with the big multinationals. So you're going to wait 10 years until, or maybe you'll pay now, argue later, but it will take you time. It's not the more immediate tax. And as he indicated, with capital gains tax, you actually have to wait for disposal of an asset for you to realize that tax. Transfer duty is for properties above 10 million bucks. Now that market is not too huge. So I'm not...
Again, it all sounds like business as usual.
It is business as usual.
6 and 8.5% on alcohol, beverages and tobacco. I mean, that's standard stuff as well. I remember when I worked at SAB, everyone would sit around the TV and they would be instantly the word would go out, put the prices up accordingly. It was very easy to do. Same with VAT. Very efficient, very simple to administer. You can't evade it when you go to the shops. No. So it's a big surprise, actually, that VAT wasn't taken. Jannie first, and then Lesiba in Cape Town.
Yeah, I must just put on record that I am not in favour of an increase in VAT. Every percentage point increase will bring around 22 billion rands. Yes, I agree with Charles, but it impacts very heavily on the poor. It is a regressive tax. So I would have been in favour, rather than an increase in VAT, in adding additional tax brackets to higher income earners. Let's say a tax bracket of 45% on people earning over R1 million and 50% on people earning over 2 million rands. And that could have brought in, according to calculations I've done with my co-researchers, about 10 billion rands. And that would be a very important sign to poor people that rich people are sacrificing, whereas that would have been seen as impacting very heavily on poor people.
Well, I suppose the point is that you make was that now was the time, whether you're going to hit the rich or hit the poor with VAT, now is the time because people were braced.
This is the time to hit, yes.
And they haven't done either. Lesiba, what's your sense of this? Lesiba?
I don't know if the rich have not been touched. If you look at all those items, if you're driving a big SUV, tires that you're going to pay on it, it's going to be quite expensive. So when I look at the detail of this, it's the wealthy that are more targeted. But the positive outcome from this, and I do think that here the government have shown an olive branch, they've shown an element of care that needs to be applauded. They've looked after the middle income. They've also looked after those that are heavily impacted by this flood, the drought situation. Because the World Bank had said that over 50,000 people have lost jobs and are now below the poverty line as a result of this drought. I do think the government has done a good thing here by supporting the most vulnerable aspect of our communities, of our society, and this needs to be applauded.
All right, well, I think that brings us back then to the, the restrictions on spending. So now we're talking about the credibility of the government, and when we're talking about the restrictions, filling vacancies, stop that. Reduce transfers for operating budgets of public entities. Is this a broad way of saying we're not going to keep bailing out SAA? So, I mean, that's the kind of detail we would have liked to see because there's big money there.
You know, it was one nice thing that they did mention. They said there's going to be a portal implemented that public will be able to view the financial performance of the municipalities. I think that is such a fantastic opportunity.
Is this the new e-tender portal? Or
No. This is another portal. So, and that creates that citizen participation, questioning your municipality, questioning the functioning of it, the productivity of it. Are they spending the resources in the right types of areas? That to me is a positive swing. And also the other positive swing was we are going to consider more private involvement in the building up of our SOEs. The specifics are not there, but at least he said it and he made it public. So there is something in place that will hopefully give more credibility. You're right in terms of SAA and in terms of some of the SOEs. There's not a lot of depth around that. But at least we know they are seriously considering how they're going to revamp those because those are huge infrastructure issues that we need to address.
So was there enough of a signal towards this?
Look, I mean, these are hugely contested issues, right? With the word privatization, I mean, you heard him go back and say, well, I hear privatization. Whatever. You know,
and that wasn't in the script.
But it's not.
Exactly.
He actually departed from his script because it doesn't refer to privatization.
Yes,
and I think in that Presidential Review Commission that came out last week after the State of the Nation address, there were lots of inferences made, saying, if they're saying that, does this mean privatisation? P word not mentioned. But he actually went out of his way today, off script, to say, we're not talking privatisation.
He actually called it co-funding. Yes. And what he's trying to do is to say the same thing, that we need to actually more private participation. First of all, because we don't have the money, but also we need these kinds of efficiencies. What is interesting, of course, is that he knows that if he uses the word privatization, the political parties on the opposite, the EFF, will hit him very, very hard, because it seems, and obviously the unions as well. So one of the things he's trying to do is say we can do this. But what I think will be quite interesting is the contestation around even that co-funding. What kind of partners will come in there? You know, who is going to be actually considered to be the sort of minority holder. You know, the minority holder will be politically connected. Will he actually bring in the unions, as he may have suggested? Those are very interesting things, and I think these are the things also that the ratings agencies are watching very closely, right? Because they complained bitterly about the SOEs and the state of SOEs and, you know, government's funding of them. So it should be interesting how actually they go about this, and whether or not it is a short-term or a long-term kind of impact. Because if it's more long-term, then what's the point?
But wasn't it precisely what the stakeholders, the market was looking for, was evidence of political will to do difficult things? And they couldn't quite cross that bridge.
You know what the interesting thing though is, Dave, is that it's not that we don't have money. There's a lot of money. We're spending 1.4 trillion rand in the next year to ensure that our economy is sustainable and there's some form of growth. The big question keeps coming back to the fact that we're spending so much money on government implementing all of these things. We need to see the delivery and the absolute results of this. As taxpayers who are funding this, that's where it comes back down to the crunch. Is that it's a great policy, it's great ideas, we all want to hear the right thing. There is money. There's money being spent. Are we seeing the results?
Lesiba in Cape Town.
It's interesting, Xanti, that you're talking about privatization. They sold their stake in Vodacom, which they used to fund the initial capital required for the BRICS Development Bank. In it, they said there are a few tranches of payments that are coming along the way, and one wonders how it's going to be raised. So while the minister has spoken that he's not privatizing, but it sounds like when you're selling a stake in a listed entity like Vodacom, that's what you're doing.
Jannie, let's about that one, because it was always private. I think a lot of people, there's no, you know, some of these things don't have much sensitivities, right? It's a small minority stake. It's not the kind of thing where they actually owned, and actually, you know, it benefited many of, obviously, the guys who are quite connected. So some of these stakes are big, and they, you know, they're actually people who are benefiting or quite close to the, you know, to the crust. It's very different with Vodacom, because that was going to be an easy one. And anyway, he said we're going to use that money to pay off at the beginning anyway, ESCOM, and help in that respect. So it sounded a little bit acceptable.
People forget that in the late 90s, privatisation was on the agenda for ESCOM, for Transnet, for all these things. It swung completely ideologically. But there are precedents. ISCOR, which became ArcelorMittal, was a state entity fully privatised. Sasol, state entity, fully privatised. Both started in the 1930s. Telkom, it's partly privatised. It's 50% in effect government, PIC and government. So there are lots of models for them to use. Jannie, I want to come back again to that cutting of costs, and you've done a lot of work on the costs of the state wage bill. And as we said earlier, the wage bill plus the social grants increasing all the time. It's not just the percentage. In the detail, there are what they call notch inflation. So people who are employed get promoted within their career path, and it costs more money to pay them. Now, that's not mentioned. There are lots of other kind of hidden costs of the wage bill, and somehow, as the accountants like to say, these things come out of the woodwork when you do the numbers at the end, and suddenly we realize we're 5% over where we should have been. You've done a lot on this. Is it realistic to make these cuts, to expect these cuts?
The only way that the Civil Service Remuneration Bill can work out is practically a moratorium on employment. I've checked yesterday, since 1 April this year, there was again still a small increase in employment. We need to see a moratorium in employment. We cannot afford more civil servants. As you've rightly said, other than the general adjustment, there are notch increases, and then of course there are promotions, and all this adds to the bill. And unfortunately in South Africa we have a cabinet with 37 ministers. That is probably 50% too big, but it means you have 37 directors general and 37 government departments, each with its own infrastructure. So what we need is not only cutting the size of the cabinet, but it's reducing the number of government departments, and in that way reducing the top-heavy structure of the civil service that comes with it. So I'm very worried about the civil service remuneration figures being thrown around. I will have to work on in more detail on them.
Well, let's put to the rest of you. We've got two political constituencies here. We've got the poor on the social grants. In 2001, there were 2 million people on social grants. Now they're 18 million. You can't undo that. In fact, you have to increase it. And then you've got the state, all the employees. They're a political constituency. They can cause strikes if they're not happy. So it's going to be quite difficult to actually implement this.
Look, I mean, the Prof touches on something very important about these many government departments and actually the big government that we have. Is that even, you know, for example, they introduced this new business ministry, and then they underfund it, so that you actually have the situation in which you've got, you know, all these technocrats and people and ministers and cars and all of that, and then you give them 400 million rand. And then you think, what is this? What is this about? How is this actually going to be effective in the goals of actually supporting business and small business if all the money goes into administration and then maybe a little bit might actually sort of, you know, get to somebody? So these are the problems of a big state.
It doesn't take much arithmetic to work out nearly a third of ANC MPs are ministers or deputy ministers. Nearly 1/3.
Sure.
Of the representation in Parliament.
Yes, indeed. It's your best chance on promotion. Get elected to Parliament, you have a 1 in 3 chance on promotion.
Correct.
Look, David, I'm not an expert on the expenditure side of the budget, but you know what I can highlight, and you know, remembering my days at the Treasury, there's a lot of dynamics at play. You see, that part of the budget, there is a redistributive element that is built into that. Actually, government does use that part as a redistributive element. So, you know, when you talk of cutting expenditures, there's a lot of sensitivities that are at play. You know, there's obviously there might be retrenchments, for example. To cut the public sector workforce, I don't think is probably the easiest thing to do. So, there's a lot of balancing that needs to be done. But in terms of privatization, the president called it rationalization. It's probably the same thing. But I think they're going for the mild version, merge certain entities, certain divisions that are less functional or less productive, maybe get rid of those. Less strategic or less sensitive assets, get rid of those. But they're not going for a whole scale. Yeah. And they're trading carefully as to where they cut on the expenditure side. It's a very critical element.
We'll come to Brigid in a moment, to Lesiba in Cape Town.
Yeah, I just wanted to make a comment on this wage bill, as the Prof has done a lot of work on, etc. The only aspect that concerned me is that when you look at other emerging market countries, and I've done a study to look at countries that eventually go to an IMF bailout or they get downgraded into junk status. 2 are very noteworthy, and they had similar problems. In fact, there's 3. 1, Colombia in 1999. It had a huge ballooned wage bill from the public side, which led them to go to the knees. And they found themselves into a bailout from the IMF. They needed $3 billion. Also, they were downgraded into junk for about 12 years. You look at Romania, in 2008 had a similar issue. Now in Ghana, which now has become the most indebted African nation, they actually saw the oil revenues coming, which actually never arrived, but they increased the headcount in that way. It's just very ominous when we have such a lofty level of employment in the government sector.
Well, and we mentioned the R word, retrenchment, earlier. I just don't see that happening. I just don't see it happening. Whatever they call it, it's just not going to happen.
No, it will be natural attrition. And it will not be the R word, it will be the N word, natural attrition.
Natural attrition, the NA word, that takes time.
Yes, but by not filling... I remember, and when we say the government, let me just stress that about 1/3 of civil servants are employed at national government level and about 2/3 at provincial government level. So when we say the government, we actually talk about 1 central and 9 provincial governments, and they must all come to the party. But they employ in total about 1.56 million people. And if you assume a 3 or 4% natural attrition rate annually, you talk about a lot of people. So through natural attrition, you can achieve a lot.
If you're ruthless about not appointing
If you are ruthless about not appointing, and who will be the gatekeeper to make sure we don't appoint?
And of course, there are lots of posts that are deemed critical, shortage of doctors, nurses, teachers, and so on. Very difficult.
But some of them, some of them will be excluded. In the budget review, it says excluding teachers, nurses, doctors, police officers.
Okay, well
they are excluded by name, not in the speech, but in the budget review.
Well, that's an interesting point to note.
We kept going on about frontline, you know, which is this idea of we need more teachers, we need more nurses, so we can't take down from there. But the back office. But the back office is a very difficult one as well, right? Because it has a lot of things that happened in terms of legacy issues that are very, very difficult to resolve. The skills, being able to also take up people or reskill them, and all of that, and the maneuvering that is necessary but very, very difficult to move around. And then, of course, the transformation issues. I don't think it's an easy thing to do, especially not through the R word.
Yeah, Brigid.
I agree, and that's exactly the point I was going to make, is I think I'm 100% behind this redistribution and creating opportunity and upskilling and giving people the opportunity to learn skills that they didn't have and create a middle class that adds value to this country. Absolutely, and I think that is imperative and it must continue. However, how much impetus are we putting on those types of roles that are critical to our economy? So those are the nurses, the doctors, the police officers. Why are we not incentivizing that type of growth? Why are we not incentivizing those types of salary structures and less incentivizing those that are not really in that much of a productive role? We've got to discern what is most of priority here and what isn't, and what adds the most value. So if we look at a provincial type of setup, where are we getting the benefit for the money that has been spent? And is there a better way to deploy those types of staff members? Are we giving them the right capacity to put them in a position that benefits all of us as a community? And those are the types of questions that we just don't ask enough of. We're too worried about things that really don't matter, like electricity tariff hikes that we can't do much about.
Yep. Let's go on to some of the allocations, and it's a bit difficult again without all the detail to know exactly how this changes things. For example, higher education, which has been a political flashpoint since November, December, where the fees must fall. And if there was going to be extra money allocated anywhere, it was going to be to higher education. So the numbers, 16.3 billion to higher education.
But that's over 3 years.
Over 3 years.
Yeah.
5.7, the shortfall caused by keeping fees at 2015 levels. 2.5 to clearing outstanding student debt. So that's like not new extra money, it's clearing money that hasn't been paid. Further 8 billion over the medium term. Jannie, you work at a university. I'm not saying that you know the budget of the universities, but does this sound like it's enough? So in other words, I'm asking, they're offering a solution by providing more money, but if it's not enough, the protests will go on and there will still be students who can't find anywhere to live or to study.
Yeah, indeed, this is not enough. This is enough to make sure that universities can sort of muddle through with no fee increases for this year. But remember, no fee increases will be going forward. And the ultimate request is not no fee increases, but free education for all. Fees must fall. So much more money will have to be thrown at this, and this doesn't look like this looks like a stopgap measure, not like a plan. Now, admittedly, there's the Presidential Review Committee on Higher Education. We should probably wait for the outcome of that Presidential Review. The other point, as Brigid has pointed out, some of these figures are immediate, some of them are over the next 3 years, some of them over the medium term. So it's necessary to tease out the detail of this, but in short, this is not enough.
So it doesn't solve the problem, and it may make it worse by people expected more money and so they don't get it, so they're disappointed.
And he actually, I mean, he went on even to talk about infrastructure and housing. Remember, housing has become quite a big thing, certainly in New City and many other universities, so he said the government will get involved in this housing story. That requires more funding, right, especially in areas where it might be very expensive to actually continue to provide that. So capital expenditure is probably going to be very difficult. One of the things that come out is also he's trying to reallocate, right, because these funds are not funds that is new, but also him trying to reallocate, taking money from places where perhaps it wasn't used, or in reserves and all of this stuff. So clearly the money doesn't exist, but if they don't address this issue in some way over the next year or 2 years, it's going to continue to be a bad and
But
worse.
there are other areas where this may be the case too. The drought relief, getting farmers out of trouble who are going to go out of business because of debt, because of the drought. So it's possible that in all these areas they're giving more, but it's not enough. So they're spending more, but it's not going to solve the problem.
But you know what the other issue is, Dave, and that's, I think, the core of what we're trying to say. I'm just stepping if I'm offline here, but I think that the minister made very clear, we cannot spend what we don't have. We can't solve all of these problems. We can't redistribute to everybody. We can't create free schooling for everybody. We can't feed all the people that are that don't have money. We can't do all of this unless we get enough people that are contributing to the fiscus. So getting that management right in terms of spending it correctly, so we get people through education, get them through schooling, get them into jobs, get them into the middle class, get them earning. How is that going to happen? We can't just redistribute. It makes everybody feel like you're doing the right thing, but the reality is we only have X amount in the coffers. We have to make and turn that into something that benefits everyone.
And that's always the case. There's always going to be not enough given and you have to spread it around, but the expectations on this budget from the recipients were probably higher this year than before. Lesiba in Cape Town?
You know, we've been looking at the government at the center of this table of discussion. However, in these ones, the farmers, the drought, and the students and education, a relationship is two ways. They've come to the party. They've listened. They've put money on the table. There's a term to it, particularly on the education, over 3 years. It's unrealistic for the entire nation to expect this to be sustained. There's no such a thing as free education. Those at universities ought to sit and think about it. That which you are requiring, demanding, is impossible. You cannot have free education.
But Jannie's point earlier was that such momentum has been achieved by the students, I think, were surprised at the end of last year when the government said, okay, no fee increases. Which also raised an interesting thing about it's actually the universities who have the autonomy to set their own fees, but the political pressure was irresistible. So you're saying that actually we're going to have the same thing again this year and it's going to be very difficult to resist.
Well, I hope we will not have the same thing, but it will be impossible for universities going forward to increase their fees, and the only other source where you can look to then, naturally speaking, is government. Of course, universities can raise funds through donations, engaging the private sector, etc., but those options are limited. So somewhere in the system a big bill is building up for government. What we've seen in the budget speech is definitely not addressing that problem.
The bill's not going to be paid.
This problem actually relates to what we were talking about earlier around basic education, and I think Brigid mentioned it quite clearly. Basic education funding is going up by a large amount right now, but we're not getting the right results. That lead us to where we are. So for example, there is a lot of funding in the private sector, except the private sector is waiting for A students. But our education system is struggling to produce as many A students that they can fund into university. So then, we're stuck. And then obviously this debate about what people can get or what they can't get, and around the fact that we can't be Germany. I mean, our youth is bulging much higher than Germany. So we are not those countries at all. So people think, well, the Germans are doing it. But Germans, the population of the youth in Germany is much, much smaller. They have an aging population, so they don't have this problem.
Brigid, on the screen a moment ago was the rand.
Yeah.
I don't know if you had a look at it.
15.64.
15 rand 64. And last night when I was on Business Tonight, so it's roughly 24 hours ago.
15.21.
15.20, 15.19, that's where it was moving around. And there was talk yesterday that if the signal from Parliament today is good, there could be a sharp strengthening of the rand. And
I think
it's gone to 15.64.
we said it earlier. I think that a lot of the good news was priced in prior to the statement, and I think that all the good news was priced in.
Well, then it should have stayed the same.
No, but the concern now is a lot of these conversations are happening not just between us, but between people sitting on desks all over the place, and we're talking about the fact that it's great in terms of what it's saying, but the delivery of it is really tough. And coming back to our conversation around education, I mean, 204 billion just this year. That's a lot of money to spend. And that's, in my mind, where you should be giving people the right to education, the right to almost free education or free education, and build it up as people have available cash. However, when it comes to tertiary education, you've got very specialized people that are teaching students in universities. You've got professors and people from business and groups of professors and doctors, etc. Those people, if you want the best, you have to pay for them. If you want it's a privilege to go to university, David, and that's certain things I think we need to learn. And this is not, yes, we need to distribute, and yes, we need to pass opportunities onto everybody. But be careful not to throw the baby out with the bathwater.
Well, as Lesiba said, there's no such thing as free education. Someone is paying. Lesiba, I'm afraid you've always had to respond to other people's responses to questions. I'm going to put a question to you. And what we said last night before the budget started was, on the show at Business Tonight, we said there are two layers that this budget's going to be judged on. The first layer is what they say they're going to do and whether that's credible or not as a statement. The second layer is, even if that's good, is there the political will to make it happen? And does Pravin Gordhan, as Finance Minister, have the political clout to ensure the political will to make it happen? So there are actually two levels here, whereas most years, is this a good budget or not? This time it's more complex and it's more political.
Yeah, indeed. He does have, if you just listen to the speech, he was able to do the Trevor Manuel style, rah-rah, don't give up, fix your eyes on the goal, which is what we need as a country. He does have political capital. I think some of the things he introduced show it in it. It's just the ideology is perhaps very different to how one would have expected, right? Because the ideology is different in that I would have preferred an outcome where we're saying, let's do core austerity. Let's not talk about rationalization. Let's do outright asset sales. Let's introduce structural reforms back into the picture. Let's rethink about how we have a conversation in the budget, not just about trying to eke out revenue to buffer the coffers of the treasury, but instead put potential GDP at the center of the debate. Because at this rate, you'll find the monetary policy is eroding potential GDP, and I'm afraid fiscal policy is not contributing in this rate. Savings are minus 2.5% in the country. You tax savings, which capital gains can be seen as, you're not contributing to changing that outcome, so how are you going to fund the investments that you're having in mind, the infrastructure investments? That's why that other side of the equation, on the debt side, even with the debt service costs, are quite a nightmare in my mind, and I'll lose sleep on it in the next while.
Lesiba. Charles, you leaving aside your tax hat, talk as a senior private sector practitioner, professional, that political question, the sense of whether this is going to happen or not, whether you feel it, but the signal that went out today.
I think the signal that went out today is that we are on course. We doing some of the right things. There is room for improvement in what we need to be doing. And we're gonna throw money into the right areas. That's basically the message that the minister, and we're gonna obviously manage our fiscals much better. The key question though is that budget is not a panacea for all our ills as a country, because some of the problems, actually, somebody mentioned, and I agree, that some of the problems actually arises at the level much below or outside of the national treasury's mandate. There's allocation. What happens across that value chain? We're throwing a lot of money into education. Are we getting the right value out of that cash? Shouldn't we start asking those questions and just looking well beyond this budget and going all the way down into this value chain of government and assessing pockets of inefficiencies and pockets that requires improvement?
So you're saying the budget can only do so much?
Absolutely. It can't solve all the problems. At the end of the day, I mean, Treasury doesn't necessarily, it's not like the public protector doesn't necessarily have enforcement capacity. They make pronouncements. And the hope is that across the government line, there will obviously be buy-in and there will be implementation. So some of the leakages are happening across the line and not necessarily at the Treasury strategic.
Maybe we just expect too much from Pravin Gordhan and Treasury.
Absolutely.
Two things for me. The one thing being that, and really what Lesiba was saying, is around the idea that, people talk about government. There's no such thing, actually, because government takes money from the public. So it's people who are actually giving to other people in the society money. So our conversations have not particularly changed around, for example, learners in university, that you can't have this for free. You're going to have to actually commit something, and that commitment might be a loan, it might be many other things. But of course, we know we've got some problems there. But for me also, of particular importance on this budget was the idea of a messaging around this cooperation working together. So this sort of semi-privatization is very good. But at the same time, you want to cajole business to work with you in this thing, because government has had this idea that they want to lead growth, but not just lead it, but be part of it, and they are right in the middle. And it's not very helpful. Part of it is that actually you want to incite both, as you want to tell the students, you can't get everything. To tell business, you can't sit there and always be waiting, but at the same time, here are some of the incentives. Come along, play with us. These conversations are not there in the practical detail, actually, of what you can do as a leading government to say, look, this is what we're allocating. Come and show us what you're going to do with this. Yeah. And that will help.
Brigid?
Agreed. I think that's exactly it. I mean, we've said for a while, and it would be, that's the core, is that we have such a strong private sector that have so many inherent skills in it, and that really work well in the environment that we find ourselves. That partnership is absolutely vital in terms of disseminating skills, in terms of getting better productivity, of actually seeing results. If we can get that more, and that really heartened me a lot, was seeing the discussions between Mr. Gordhan and the CEOs recently, and those have been on an ongoing basis over the last month and a bit. Absolutely fantastic, and may they long persist. And as you said, I mean, there's a limit to how much government itself can do. Absolutely. But we, I think that the proof of the pudding will be in the eating, and a lot of this is going to really be about seeing that flow through. We are in an election year, people, so obviously there is going to be a lot of placating of the right people.
Jannie?
For this year, the important number is 3.2. The budgeted deficit before borrowing is 3.2% of GDP. And the final test, in the final analysis, will be, can we realize a 3.2% deficit GDP ratio or not? So this year, we'll be watching the 3.2.
If we lose our rating, I'll give you a clue.
Lesiba, let's go back to the big picture, and you can finish off our discussion. In brief, Pravin Gordhan said at the beginning, he said, against the background of slow growth, rising debt, etc., the budget deficit will be reduced to 2.4% by 2018-19. Expenditure will be cut over 3 years by 25 billion, and tax increases will deliver 18 billion. That was his summary at the beginning. Are you buying it?
Yeah, that's good, because they have the key to control that revenue, and those ratios will change as a result. So yes, rating agencies will look at this and say that's good, but I need to see how potential GDP is not going to be eked out. It's not going to be hampered going forward, and therein is the missing part.
Well, now we have to wrap up that discussion. It went like lightning, like the budget speech, and boy, there's so much more in the budget, the detail that we have to unpack. So I would think the consensus here is a good budget, but maybe a business as usual budget for a situation that is not business as usual. But maybe in the coming weeks and months we see delivery and concretization of some of these principles and explorations. That was Brigid Taylor, CEO of Kaon Capital, Charles Makola, Director for International Tax at EY Africa, Professor Jannie Rossouw, Head of the Wits School of Economic and Business Sciences, and Xanti, Payi, an economist at Nascence Research Insights. And of course, joining us from Cape Town, Lesiba, Mothata, Chief Economist at Investment Solutions. Thanks for joining us.